Hello and welcome to video 5 of your training. In this video I want to cover time frames, currency pairs to use with this forex system, and some advanced ideas like money management. Let's just talk about what we're going to cover here. We're going to cover the currency pairs that can be traded well with this system. We're going to cover the time frames to use. Really you should be using the daily charts with this system, but we're going to talk about how you can adjust it to the 4-hour charts as well. And then I'm going to give you an easy money management system. Managing your money in forex is very important, and you should always use a proper money management system. It's the #1 way to protect yourself from large drawdowns and protect your profits and grow your account over time. So let's just start with currencies and time frames. The currency pairs that will work well with this system include the euro US dollar, the British pound Japanese yen, the British pound US dollar, the US dollar Swiss franc, the euro Japanese yen, and the US dollar Japanese yen. Any of those currency pairs will work well with this system. Since it's a trend system, it can easily be extended to other currency pairs, but when you're just starting out, use one of these to get started. It will help you learn it faster, and these currency pairs tend to trend for longer periods of time. For the time frames, as I said before, this system is best traded on the daily charts, but you could also use it on the 4-hour charts if you wanted to. If you're trading on the 4-hour charts, don't use 200 pip stops. Obviously, a 200 pip stop is too large for a 4-hour chart. You could use the same rules with a 50 or 60 pip stop and use it that way on the 4-hour charts. And then finally, let's move on to money management and show you an easy money management system that will allow you to manage your risk, avoid large drawdowns, and grow your account more over time. So let's just get started here. In this money management system, we're going to use a percent risk level. So we're going to always risk a consistent percentage of our account, and we're going to vary our trade size according to the stop loss that we're using. So with this system, to succeed using it, you're going to need to know your stop loss, and once you know that, we need to calculate a per pip value and use those two items to calculate the amount risk on a trade. And then using that information, we can calculate the proper trade size so that you're always trading the correct amount and risking the same level every time you trade. So let's start by calculating a per pip value. This isn't hard to do. Calculating a per pip value, here's the formula you're going to need to do it. You need to divide 1 pip with proper decimal placement, divide by the currency exchange rate, and then multiply it by the amount that you're trading. And the amount that you're trading is usually going to be either 100,000 for a full lot or 10,000 for a mini lot. And to just give you an example of how to use this formula, with the US dollar Japanese yen, we would take the per pip value with proper decimal placement. So with a Japanese yen pair, it's 0.01. With any other currency pair, it would be 0.0001. In this case, it's 0.01 divided by the exchange rate, 92.52, and then multiplied by the amount we're trading. So if we were trading 1 full lot, it would be 100,000. So in this case, it's going to equal $10.87 or 80.87 cents, or 1081 to make it easier to calculate with, per pip. And it's important to note that this is only necessary if the US dollar is on the left-hand side of the currency pair. Like the US dollar Japanese yen, the US dollar symbol is on the left-hand side. If it's on the right-hand side, such as the euro US dollar, then the per pip value is constant. A full lot is always going to be $10 per pip, and a mini lot is always going to be $1 per pip. So once we have a per pip value, we can move on and we can calculate how much we risk on each trade. Using the per pip value from before, it's 1081 is what we calculated. If our stop loss was 50 pips on a trade, then we'd be risking 50 times $10.81 equals 540.50. For every lot we traded, we would be risking $540.50. And then we can move on and begin to calculate a trade size with that number. We're going to risk a constant percentage of our account, so our trade size is calculated from your current account balance, and we're always going to limit our risk to a certain percentage, and usually you're going to use 2%. Some more experienced traders increase that amount to 3%, and I've even heard of some using 4%, but 2% is a good number to use all the way through your forex career. So if your account balance was $120,223 and you could risk 2%, then we could risk 120,223 times 0.02 or 2% equals $2,404.46 on every trade. That's what we could risk on that trade at the moment. So from that, we can now figure out how many lots to trade with this current trade. We can divide the allowable risk by the risk per lot, and that'll give us the number of lots to trade. So $2,404.46 was what we were allowed to risk with our current account balance. And with the 50 pip stop, we were risking $540.50 with every lot traded. So we divide those numbers and we end up, we're allowed to trade 4.45 lots. Okay, so we always round down once we have this number. We're not going to trade 4.45 lots unless you have an account that allows you to do so. If you can trade full lots only, you would trade 4 lots. If you have a forex broker who also allows you to trade mini lots, you could trade 4 lots and 4 mini lots. When you're trading a system like the one we just taught you, you would divide that number in half and trade 2 lots as your first lot and 2 lots as your second lot. And if you had an odd number, such as 5 lots that you were allowed to trade, maybe you would trade 2 lots as your first lot and 3 lots as your second lot and keep the bigger lot in the trade. It's not really set in stone, but you do want to try and consistently risk that 2% of your account. Okay, so just to finish up here, some final thoughts. Before trading any forex system, practice it until you understand it well and feel you will profit from it. It's important to learn the system well. Use practice with a demo account, practice with historical data. The more comfortable you are trading a system, the more likely you are to profit with it. With every trade, always use money management. This is going to help you profit over time and avoid large drawdowns on your account. And when you're just learning any forex system, it's easier for you to learn if you stick with 1 or 2 currency pairs. For example, stick with the euro, US dollar, and 1 other currency pair while you're learning, and then expand into other currencies as you learn to use the system well. Doing so will help you learn it faster, and it'll also help you to profit more because you'll learn those 1 or 2 currency pairs a lot better. You'll learn how they trend and how they tend to profit, and it'll make it easier for you to make money in the long run.